Good afternoon, and thank you all for joining us today. I'm so grateful that you chose to come here. Every time you come for a Cognizant event, I'm very grateful. I chose this point of time in my journey with Cognizant. I spent 2 years in Cognizant. I joined 2023 January to tell you this story, our journey, after we have rebuilt a mojo on the flywheel of clients and employees. We reinvigorated the company, built resilience and durability, and put some points on the board. We are on that inflection point of a new growth trajectory. We are super excited to talk to you about our aspirational goal to be in the winner's circle. And I'm going to define the winner's circle as we go forward, and establish Cognizant as one of the world's top-tier IT service providers. We've made great progress so far in this journey to be on the winner's circle, and this is a great time for us to reflect and also tell you the story ahead. I want to take this opportunity to also introduce my leadership team. Some of you're going to see them as speakers, some of them in the audience. And I'm so grateful to my board who has been kind enough. 5 of my board members have also been a part of the audience. So you should be able to interact with all of them during the day. We have some showcases there. It says tiny space. If you want to see more of it, please write to us. We're going to send you more information and hopefully engage. So that's broadly what I had to start with. 30 years of heritage, engineering modern businesses. In these 30 years, we've had an era of globalization. Enterprises across the world used technology to scale. It was a peaceful era of globalization. And as they scaled, they used technology and they used providers like us. So in some ways, in these 30 years, there were cost budgets allocated for tech transformation. The last 10 years, there was a new swim lane of tech disruption happening through digital transformation, and we had access to the revenue budgets, the growth budgets of our customers. But over these tech disruptions, over these 30 years, we built a heritage of sensing, incubating, and scaling new technologies which are relevant to our clients. And we did this so well that we made the next wave bigger than the current wave. And that was the strength of Cognizant. We built this unique franchise value, as I call it, of client intimacy, strong client relationships, expertise at the intersection of design, domain, technology, and we had a flexible co-creation culture. That remained consistent across every wave we went through. In the process, we drove the application development wave. We defined the SMAC wave. We were the one who defined the SMAC wave. We led the initial wave of digital transformation. We kind of slowed down a little bit on the extended digital transformation wave between COVID and after COVID. And since 2023 to now, we course-corrected, bridged the gaps, reinvigorated the company, built resilience and durability, and invested in the next wave way ahead of anybody else. Invested in the next wave way ahead of our peers, and we think we are so uniquely poised. You're going to hear from some of my colleagues on the AI disruption around us. There's a lot on these slides. I'm going to touch a few points. We have a stable leadership team, significantly reduced attrition. We revived this grassroots innovation movement in the company. One of the heritage of Cognizant, which I feel so excited about, is every time there was a tech disruption, we actually built human capital from inside. We had this unique heritage of hiring from schools, keeping people for 10 plus years. I have 70,000 people in the company who are more than 10 plus years. And they know the craft well, and they traversed the reskilling infrastructure of the company and moved to the next disruption in an economically viable way. So we had such amazing economics, which we have restored now. That is going to make Cognizant what it is for the future. That is what is going to make us a leader to get to the winner's circle. The expansive margins. We've built a trajectory. At the start of my period in 2023, I actually spoke about a next-gen program. We created this flywheel where you take out cost, run a tight ship, and push the savings into expansive margins. I've actually spoken about expansive margins for the future, and invest into the future so that we stay resilient, but we also capture the opportunity ahead of others. We went from 14.6% in quarter one of 2023 to 15.7% in quarter four of 2024, including the 30 basis points impact we had because of an acquisition we did, which was very strategic for us, Belcan. That flywheel is going to continue, and we are going to keep the expansive margin trajectory for the future years. A large deal momentum. We have created a muscle of large deal momentum through AI productivity, very unique, sole-sourced muscle with AI productivity. We did 29 large deals last year. In fact, one of the things I'm excited about is we built resilience and durability. I spoke about it a number of times, and I did so because we are no longer just a healthcare. We're very strong in healthcare, by the way. We did 10% growth Y-on-Y on healthcare. Financial services, but we actually expanded ourselves to all the other industries. Now we have industrial, comms, retail and CPG. We expanded our large deal engine from US to Europe, and we now operate on 4 pillars of tech services, all the way from tech services to BPO to infra-led transformation to engineering-led transformation. So we do believe that irrespective of the times around us, we are more resilient and more durable because of the spread of services and the spread of verticals. Look at the preliminary results. 10 percentage points down on attrition. That gives me the leverage for lower cost of human capital and higher fulfillment rates for our clients. Every time I go and see a client, I ask them, what is so special about Cognizant associates? They tell me, every time I meet an associate, they not just do what we tell them to do, they look for incremental innovation, they look for adjacencies, and they create a sense of value add beyond what is the spec of the job. We now have a grassroots movement in the company, 250,000 ideas, 47,000 already delivered to clients, and they've probably created incremental value and incremental projects. 14,000 people have returned. My head of HR, who's going to talk to you later, Kathy, she's going to talk about 20,000 more people are waiting on the wings. And 5 to 7% of what we hire today is actually returners who are coming back to Cognizant. We spoke about AI productivity, and I'm going to touch upon it in the subsequent slides. We use AI productivity to sole source and create large deals, and we share those benefits with our clients. In addition to what we've shared with our clients, we have 12,000 more releases where we have created incremental productivity. In Q4 of last year, we did 2% organic growth with more than 15,000 people, less than 15,000 people from the previous year. So that's the power of AI productivity, which is kind of going like it has a great curve now as we go forward in 2025. 900 basis points, we bridge the gap all the way from Q4 of 2023 to now. Organic, 600 basis points of growth, 300 basis points of growth in organic. So we kind of have taken the trajectory all the way from minus 2.4% to 6.7% Y-on-Y in quarter four. The highest NPS score and the highest employee satisfaction 2 years in a row. So we are back to the winning heritage. We've built resilience and durability, and we are prepared to lead the next wave. And I actually think we are very, very well positioned for the next big opportunity in front of us. So what is the future of IT services? How do we see it? And there are a number of things, but I'm going to highlight two important things we are invested on. And we do believe this is going to change the way you're going to see tech services in the future. First, artificial intelligence. Double engine transformation, one related to hyperproductivity, which is today, and it is already happening since 2024. And the second is AI-led innovation, AI-led new revenue models, AI-led growth models, where the foundation is being built today. Both are actually unique big opportunities for us. The second, I'm very conscious about saying this is embedded engineering and not ER&D, because we caught this wave later, and we caught this wave after the legacy ER&D spend was a big opportunity for tech services companies. So what are we talking about as embedded engineering? The last 10 years of digitization was to tech services in some ways happened in services industries. The next 10 years of digitization is going to happen in and around physical. We invested even before I came on board. Since 2020, we've been investing on embedded engineering to make the physical intelligent, connected, and in some ways autonomous. And we're going to see a ton of opportunity there. So we're excited about the future of ER&D, as you call it, which we see it as embedded engineering. We are so lucky that we have massively invested into both these areas. On the AI labs, you're going to hear from my colleague Babak. Way back in 2023, we invested. The Neuro Platform Suite, you're going to hear from my colleague Prasad. Cognizant's heritage was to catch these waves very early. So we have a heritage of building platforms. What I mean by platforms is, whenever you're catching these waves early, technology is evolving, there are always going to be gaps to make it enterprise grade. And as they get productized, you're going to see those gaps. So we build intellectual property on the edge. I call it fast software. So we are one of those companies who has always been interested on fixing those gaps, productizing it, and running along with the services, bundling it with the services. We have now done that for AI, which is evolving at a rapid pace. And I call it last mile infrastructure as well. You're going to hear about multi-agent orchestration from Babak. It's very interesting. Every software ecosystem is building agents. We built an orchestration layer, which we believe is a gap today, which can actually get agents from different ecosystems to talk to each other and generate the kind of productivity clients are looking for. We have called out $1 billion of investments in 2023 for AI, and that was way before this was taking off. Let's look at the embedded engineering opportunity. In fact, we did similar investments in embedded engineering as well. We built labs, we built investments on IoT, IT and OT. We built investments on, investments on intelligence on the edge, smart manufacturing. So the spend we are going to see now is multi-trillion dollars. Embedded engineering is going to go from insourced to outsourced. Cloud and data, which was happening for the last 10 years, will get catalyzed. There is $2 trillion of tech debt sitting on balance sheets, which will get unleashed. In fact, I was talking to a bank last week. They have a lot of legacy infrastructure. They don't have the tribal knowledge, they don't have financial capital to pull it out, and they don't have legacy skills. It's a unique opportunity with the power of AI. And operations are going to be digitized. You're going to see some of the things we are working on. We're going to see a new wave of digital operations opportunities. The embedded engineering opportunity is fascinating. It cuts across all verticals, and that's the strength of what we have done since 2020. We have invested in boutique companies which are in specific industries. In health sciences, we have two companies which actually we bought way back in 2020. on life sciences manufacturing based in Ireland. We're building connected pharmaceuticals and connected healthcare using them. Financial services, deep fintech is still a huge opportunity. Network engineering. In fact, I was talking to an automotive client a month ago. They work with us on all the IT systems, and they also work on writing software for autonomous driverless cars. They have budget constraints on the IT work they do with us. They have unlimited budgets for writing software for driverless cars. So that's the power of what embedded engineering capabilities can do. Of course, with Belcan, our CEO of Belcan is here today. We have the same opportunity on aircraft, embedding software into the aircraft ecosystem. This is the three-vector opportunity of AI, and this is how I see it, and this is how Cognizant sees it. It's a massive opportunity to disrupt work, workplaces, and workforce. There is a platform shift, and that's why this opportunity is so uniquely big. There is transformer technology on the algorithms, massive compute, and internet scale data, all coming together. And when they come together, the scaling laws are very different. Till now, technology disruptions were always seen with the Moore's law, which kind of moved every 18 months. The AI disruption is through AI scaling laws, which are actually moving every 6 months. They're doubling in every 6 months. So cost reductions, compute efficiency, increased accessibility. We are unlocking thousands of use cases at a rapid pace, and the models are getting cheaper and cheaper, which means the value will move from the infrastructure to the front. And enabling that hyperproductivity for our clients, industrializing AI, and agentifying the enterprise, which is, I think, a mind-boggling opportunity I'm going to talk about. It just changes the TAM on what we can address. Let's see the first vector. It is today and all the way in 2024, all our large deals, a good number of them we sole sourced based on AI productivity. I and Surya, my head of Americas, we went and spoke to one of our clients who was up for renewal a year from now. We went and consolidated. We gave them productivity. We shared the benefit. We consolidated and got their top line bumped up. When you share productivity, your top line goes down. It's managed, it's called managed rebaselining. And when you do managed rebaselining, you have to consolidate. And in the process, we constructed a big deal where we sustained our margins and we created an incremental value on the top line. We have a platform called FlowSource, which unifies human effort and machine effort. 20% of the code written by us is written by machines. In fact, we are the only system integrator which has quantified code written by machines. We are the only system integrator which has quantified it. I did that in my last earnings. In my earnings before, I actually spoke about number of lines of code written by machines. And we think that will change the way we are seeing this. We're going to repurpose those savings for innovation. We're going to create a bigger opportunity for ourselves. So this gives us the opportunity to work in times of uncertainty where savings, productivity, and efficiency can also lead to opportunities. Look at the impact. I spoke about the 12,000 FTE, 70 implementations we have on FlowSource, 20% of the code is written. We actually pick all programs where we have managed services. Jatin is going to talk about how our fixed price programs has gone up by a number of percentage points since 2023. Look at how we are adopting it. There are 360 odd accounts where we do a lot of managed services work. 83% adoption, 37% are scaling, 56% are having an impact today. This is something we're doing grounds up. We want to change that universe. We want the 2,000 plus clients of Cognizant to have managed services work with us. so that we can share those benefits. Vector 2. I call this industrializing AI. And I call this industrializing AI because it is a unique heavy lift you need to replumb the existing stack. You have to replumb the existing stack, all the way from the data, the cloud foundation. Naveen, one of my colleagues, is going to talk to you about the unique opportunity there, how the SaaS layer is going to take a part of the logic, and you're going to move the logic to the dynamic AI stack. And we want to rewire the experience layer. My colleague, Ben, is in the audience. He's actually running a unit called Cognizant Moment, which is about making UI generative. We believe just-in-time design that customizes to what you're doing, to when and where you're doing it, and it'll keep adopting with you. That's the UI we're going to build. I mean, that's the user interface. The existing user interface is out of the window. So the ability to reorganize all of this is a uniquely big opportunity. In fact, if AI is also going to take a part of the human labor, the software to labor equation is going to change, which means you need to know the work graphs behind. I was at a customer service function for a healthcare client recently, and I was looking at what a customer service agent does. And if you want to replace that with an AI agent, you need to know the work dynamic behind it. They picked data from different places, they consolidate it and push it to solve queries. So you need to know what's happening behind it. I and my financial services had met one of our clients, and we wanted to agentify a teller. You need to know what a teller does. So the work graphs are equally important. So we did productivity studies. In fact, we partnered with Oxford Economics to do productivity studies. We have 1,200 projects running on Vector 2 adoption, a lot of heavy lift. These will translate to Vector 3 at some point of time, and we have 100+ platform implementations. I spoke about the platform story. My colleague Prasad is going to double click on this. We have created the last mile infrastructure to catalyze the embrace of AI. And that's why our clients are loving us. It's a unique differentiator of building last mile infrastructure, which will help us accelerate and change the pace at which this embrace is, reduce the cost, reduce the risk in doing AI embrace in enterprise landscapes. Remember, enterprise landscapes are so heterogeneous. I mean, technology of the past, you first had governments, then big enterprises, then small enterprises, then consumers absorb it. In the last 10 years, consumers get it first, and enterprises get it at the end of that cycle because it is heterogeneous and complex. So these platforms are last mile infrastructure, intellectual property which we own, and we bundle it to the services, and a lot of it is now AI-led. In fact, we have business platforms, which Surya is going to talk about, and our TriZetto platform is completely AI-enabled. And you're going to hear from one of our clients talk about it as well. The third vector, which is agentifying AI. Software's newfound ability is to go after labor spend instead of just serving as an enabler. In fact, this has radical implications. For the first time, technology is not just offering tools for humans to work, it's providing intelligent, scalable digital labor that performs tasks, autonomously makes decisions, and learns through the process. Now, what does this mean? We can actually tap into labor pools around software, agentify it. The question is, will that be up for agentification? The question is, will that be up for outsourcing? So we are building a capability set which compels customers to view it in a very different way than how they see it today. We're also connecting with the AI native startup ecosystem. One of my colleagues, Sandra, is going to talk about our partnerships with startup ecosystems. Startups in the past were up to disrupt big businesses. The AI native startups today want to help transform big businesses because their algorithms are meaningless without the access to their state. So we want to be that bridge, that value-added bridge between startups and large enterprises. This is an unlimited TAM, an unlimited totally addressable spend. You can tap into untapped human services. We call this services as software. And I'm going to talk about two real examples as we go forward. Let me talk about the first one. There is a showcase out here about a client who's actually agentifying the sales function. So if you look at a traditional SI, for $1 of software, there was probably $2 of services if I'm implementing CRM in a sales function. That is probably a $100 billion market. Now, if I look at the labor pool around it, the opportunities people are punching in, the forecast people are punching in, the sales incentive comp which is happening, if I put all of that together, it's $1 trillion. And here is an example of a client, you can see it in our showcases, who's actually doing an RFP by agentifying, and Cognizant is actually helping them do so. So what is the TAM now? It's not $100 billion of software services. It is all the labor attached to it. Let me give you one other example. It's about labor which doesn't exist today. There's a medical devices company which is a client of ours. I went to see them 2 weeks ago. And they do all systems work with us. They build compact medical devices which sits at people's homes. And people, 50 to 70% of the time, take it to a clinic because they're not able to use it. And they use a nurse to get it done. Right now, I'm working on a digital nurse for X dollars an hour to self-serve at your home. That's untapped services. Now look at what we could do with agentification. It's the art of the possibilities, all the way from horizontals to verticals. Surya will talk about an underwriting example. He has 100-odd agentification projects running in various verticals. Fascinating opportunities. The question is, where can you build the capability? What will get agentified? What will get outsourced? Will they just give you the agentification work, or will they give you the combination of the two? I think that is what we have to look at. I mean, we have to make the choices of what we will do and what we will not do. I see this as trillions and trillions of dollars of opportunity, but we have to pick and choose what we think we will uniquely win in the market. So this is not just IT spend, this is labor pool spend. This is about labor pools which don't exist today. And look at the preliminary results. In fact, the one in the middle, 25% healthcare claims is TriZetto. We can auto-adjudicate and reduce the effort significantly with the power of TriZetto, which has $500 billion of claims going through our books. So what's our right to win? We sensed this early. We invested early. We have a platform approach to take common problems clients have, translate that to intellectual property, which we can bundle with our services. Those are the platforms Cognizant owns. And we have the capability at the intersection of technology, industry, and operations, which has been a heritage, a 30-year heritage for the company. Our strategy is to drive long-term shareholder value. We are confident in our strategy and its ability to drive long-term shareholder value creation. As you saw this morning, our board approved an increase in share repurchase authorization, and we're committed to add $500 million more to share repurchases this year, in addition to the $600 we were planning to do, underscoring our conviction in the strategy and the opportunity we have ahead. And you're going to hear from Jatin. In fact, his presentation is the last so that you can see all the numbers and you don't go away. So our new set of strategic imperatives are evolving from the past, amplifying more on talent, the learning infrastructure, scaling innovation, more platforms, more of grassroots innovation, accelerating growth using AI, both on productivity and on the new opportunities on agentification, We want to be in the winner's circle by 2027. Our definition of the winner's circle is to be a top tier player. You can see the 10 players at the bottom. So amongst the 11 players, we want to be in the top tier, which is top 3 or 4 players by 2027. We were 10th in 2022. We were 8th in 2023. We were 6th in 2024. And that's why I chose to come here when we put some runs on the board, as they call it, or points on the board. And we were above peer. I mean, if you look at the averages, we were 8 percentage points below the peer average, 3 percentage points below the peer average, 50 basis points above the peer average, and we want to be in the winner's circle. In the winner's circle is not about top tier revenue growth. We want to gain market share. We want to keep our large deal momentum. We want to skill for the future. We want to do gradual margin expansion. We've created that flywheel of gross margin and operating margin leverage, and which means our EPS growth is going to be higher than our revenue growth. So 10 to 30 basis points in our outer years. Remember, in 2025, we've already said we'll do 20 to 40 basis points in 2025. In 2026 and onwards, at a minimum, we want to do 10 to 30 basis points, invest back the balance into growth, depending on, I mean, we want to have the flexibility to invest back into growth, but we want to keep an expansive margin profile and 90 to 100% free cash. This massive opportunity ahead of us, our differentiation, our current momentum, our early investments into the next wave, our early wins gives us the confidence for this compelling path to be on the winner's circle and for shareholder value creation. You have a great agenda today ahead of us, some showcases. I will now hand over to my colleague Prasad, who's going to talk about unique IP-led differentiation using platforms and digital engineering, and then you're going to hear from Vibha about the embedded engineering story of ours. Thank you for listening to me today.